Okay, so we just wanted to do a bit of a conversation about the budget early this month. So 3rd of March, Chancellor did his budget. We did our review from MAP, which is all documented in here. But we appreciate that business owners, our clients, our audience, our community, if you like, are not accountants. And so we wanted to just make sure that we were verbalizing some of the changes and what they actually mean to the clients that we serve. So I think what we'll start to see as we work through this, that we actually feel that obviously the government had to start making their money back somewhere. But thankfully, a lot of the concerns that we had, some of the ways that it could have hit small businesses have not come to fruition. And a lot of the tax gains for the government were aimed at bigger businesses, which was positive. So Abasina, hello.
Hiya, you okay, Paul?
I'm good, thank you. You're going to talk about the effects on what we're calling personal. So, this may affect employees of businesses, but largely the directors as well. So it felt that sort of the things on the left in terms of personal tax, income tax as usual, not an awful lot of change, but there has been some significant changes for those that are involved in property.
Yeah, that's right. So when you, on the face of it, just reiterate what you said, Paul, it looks like there's no changes, where majority of things, the Chancellor confirmed that there's not going to be any tax rate rises. The thresholds for tax bands, they're going to stay same and frozen. Same with annual exemption allowances for capital gains, inheritance tax, and pension lifetime allowance. Now, but what that doesn't account for, and what I think is going to be a little bit of a shock to certain people, is that although they have frozen, what that really means is it is a hidden tax increase, because inflation will rise over the next 4 years and the tax thresholds will remain the same. Ordinarily, you'll see that increase every year, whereas the government has announced to keep that same. So that's that. In terms of property tax, what we'll see is the stamp duty has moved around a little bit and trying to re-energize the property market. So this is for people that are moving into their main residence or selling their home and going into that. And what we can see that the extension has gone from, so anyone purchasing a property for £500,000, there won't be any stamp duty land tax being paid on it. And then that's been extended and tapered off up to June, September and October when it goes back to normal. But when we do look at that, you've also got to take into account, so when people are going into buying first-time home, buying their first property as their main residence, it really doesn't have an ill effect, because what we're seeing in the market is property prices are rising by 4%. Stamp duty, yes, there are exemptions. So what you would have saved in stamp duty, you're probably going to be ended up paying in the cost of your property. So the good side is better for you to, because now you don't have to seek that stamp duty money. You can lend it effectively from banks, but that's really the change. So yeah.
Great. And then this final thing about people moving, if this is moving home and getting help from the government with the legal costs.
Yeah, absolutely. So that's obviously, we know that the government was incentivizing lenders to give people interest-free periods, or where it's only interest only. And what the government is extending now is saying, if you're going to be moving home, we're going to allow you and support the lenders to be incorporating your legal costs within your mortgage rather than having to fund that yourself.
Yeah, brilliant. So in summary then, 5 years of personal tax thresholds staying the same, which, as you say, is incredibly unusual. They would expect to rise slightly every year, but staying the same for 5 years. The stamp duty is reliefs are particularly favourable at the moment, but they're going to be tapered off over time.
Yeah.
And there is some help from the government to spread your legal costs in line with your mortgage.
That's right. Yeah.
Super. Team. So Rachel, I think this was again a big sign from the government that they want to encourage businesses to retain and to add to their team again. What were some of the incentives that they've put in place?
Yeah, that's right. Obviously, Rishi was keen to keep unemployment rates low, and just keeping the country working is really the main priority, I think, from this budget. So the furlough extension is just a big relief to a lot of people. A lot of companies still haven't got the revenue back to pre-COVID levels. So being able to keep some staff furloughed for the hours that they're not working is a big relief. So this is tapering off from 80% at the moment, and there'll still be government grants for 70% of the wage costs from July. That'll drop to 60% from August, but there is still some furlough grant available up to the end of September.
Great. So welcome news there in terms of giving businesses time to get their employees back if revenues have not quite reached pre-COVID levels, as you say.
Absolutely.
Apprenticeships, been some welcome changes there as well.
Yeah, this is really to try and kickstart employment for younger people. So there always has been some apprenticeship funding, which has been increased. And this year, between April and September, any new hires will receive an additional £3,000. Now that's on top of the usual £1,000 training incentive that the government would cover. So that is really favourable. And when you consider that the apprentice rates are only £4.30 an hour, that means that in the first year of an apprenticeship, when you take the grant into consideration, for a little over £5,000 cost, you've got an apprenticeship. Now, one of the other big changes there is previously it had only been 16 to 24-year-olds who you could hire on the apprenticeships, where now that age limit has been taken away. So any age we can hire on the apprenticeship scheme.
Yeah. So the apprenticeship wage level differs, doesn't it, depend on the age?
It does. It's £4.30 an hour, and that does change up to the 19-year-old, but that's only during the first year. You would still receive only have to pay the £4.30 for the 19 and above in the first year.
Yeah, amazing. So like you say, for an investment of a little over £5,000, you could have a young apprentice for the first 12 months working.
Yeah, fantastic incentive to take people on. It really is.
Yeah.
Yeah.
Great. And then these COVID test exemptions.
Yeah, so last year, very early in lockdown, when everyone was working from home and working out how to work from home, there was some quick incentives to allow people to get tax allowances for equipment for their team. So that was due to run out in April 21, but it's been extended now to April 22 to allow that equipment to be bought to help working from home. And it's also been extended for employers wanting to provide COVID-19 tests for their staff. So there is full tax allowance for that too.
I think what that does, the home office equipment, it gives employers more time to think about what their work from home policy is going to be, because they're probably going to come back to the office before they then decide how much we're going to do with this and how much homework. It gives them another year to think about what setups they need at home. Yeah,
absolutely. Yeah.
Great. And then the living wage.
Yes, the minimum wage has changed to the living wage. Sorry, has changed to £8.91 an hour. Now we do get a change every year, but I think the big highlight really this year is it's bringing age 23 and 24-year-olds in line with 25 and above. So that minimum wage, the living wage, has changed to include 23 and up. So the minimum wages, which are for the younger age groups, there has been slight increases there too. But yeah, it's bringing the 23-year-olds in line. That's been the main highlight.
Super. Thank you, Rachel. And then Abasina, can you talk to us about the changes for business then? I think this is probably the most complex one, so go easy on us.
Yeah, certainly. So what we'll notice here is everyone's going to be talking about the headlines. This was the biggest headline going on, corporation tax. Everyone expected it to increase, but not everyone expected it to increase from 19 to 25. Now, the big caveat is this, that yes, it's increasing 25%, but for the next 2 years, we're still staying at 19%. So just go consider, we've got an election before then. So this might never come to fruition, but for now, assume that it will. So the changes is the main changes, corporation tax rate increasing from April 23. In line with that, they've introduced a new small profit rate corporation tax for smaller businesses. So I must reiterate that smaller businesses that make profits of less than £50,000 will stay paying at 19%. So nothing will change there. And anyone that's earning profits over 50,000 and 250,000 will pay a tapered relief. So anywhere between 19 and 25, anyone earning profits over 250,000 will pay the full 25%. So that's corporation tax. Within that, you'll see that there has been a temporary extension to carry back trading losses. So this is really welcome, because previously you'll only be able to carry back the loss to one previous year. So businesses that have been struggling over the last 12 months will now have more of an option to go back and claim some more reliefs over the next 3 years. So that could be a vital cash injection for anyone trying to recover.
What we're saying there, Abasina, for those clients who have maybe hopefully not used to making losses, so you might have never known that this existed in the first place. If during any year as a business you were to make a loss, and obviously therefore you don't pay corporation tax because you pay corporation tax on profits, what the government will allow is that if you made a profit the previous year to your loss and paid tax on that year, you're going to get some of that tax back because you followed the profit making year, the loss making year. What they'll now allow is if you've made a loss, and particularly obviously this is designed at the effects of the pandemic, if you've made a profit in any of the 3 prior years, or in all the 3 prior years, you can use it against those years to get some tax back as well. So if you've made a trading loss as a business, get in touch. Obviously, if you're a client, we'll be doing this anyway, but if you're not, speak to us or speak to your accountant to make sure that you get the full use of that loss to get some tax relief back.
Yeah. So once we moved on from that, the next bit that Rishi announced was really welcome was the changes to the capital allowances regime. So you would have heard this about, 130%, 50% super deductions and first year allowances. If we take it back, we know that the main reason what capital allowances are there for is giving businesses tax relief on their fixed asset purchases. So things like computers, office equipment, desks that they purchase is giving them sort of relief. Normally, ordinarily, you would get a proportionate amount of tax relief. So let's say you bought a piece of equipment and the normal relief is 18%. You'll be able to claim 18% until you've used up that full purchase cost.
Yeah. So that would take like 5-6 years to write off the cost of something that you bought this year, usually.
Yeah, absolutely. So what they did introduce was something called the annual investment allowance. So what that really meant for businesses was they could invest up to £1 million into their business and claim the full 100% cost. So if something costs £1 million, they'll be able to offset that £1 million against their taxable profits on the year of purchase, rather than having to claim back or claw back the relief over a number of years. So that was temporarily increased to £1 million from 200,000. Now they've added another extra year on it, so you've got another year to invest up to £1 million. On top of that, there's been something that's even better that most people will look at now, is the super deduction, which effectively is very similar to the annual investment allowance. The main difference is it only applies to brand new equipment. So this is going to be your main difference. But what it does do, rather than the annual investment allowance, you only get 100%. Here you're getting 130%. So if a business typically spends £10,000 on brand new equipment, rather than getting £10,000 relief, it's as if they'll get relief as if they've spent £13,000. So which is a massive difference in tax that's going to be payable. The difference, like I said, the main thing is got to be brand new equipment, and that the expenditure, the purchases have to be between April 21 and March 23. So as long as that's happened, most businesses will qualify or should qualify for the super deduction.
Yeah, so this isn't about rushing to go and spend money on capital equipment, but it's just saying that if you do that, if you invest between April 21 and March 23, you're going to get this enhanced deduction for corporation tax purposes. So again, stimulating the economy and encouraging businesses to invest again. Yeah.
Then we move on to, we have another group of assets called special rate assets. Now, very similar concept again. The big difference here is normally you'd get the specific types of assets within this group, such as integral features or cars or vans that are not low emissions, that normally you'd only be able to qualify for 6% relief year on year. What this is said now, if it's brand new again, if it's a brand new piece of assets that's qualifying for special rate, you can now claim up to 50% of that within the first year. And again, timing of investments between April and March 23.
If I could just try to summarise, the annual investment allowance and the 50% first year allowance are effectively helping you to claim your relief quicker on
Yeah.
your expenditure. The super deduction is actually enabling you to claim a higher relief. It's not just about timing, it's actually enabling you to claim more than what you've spent, which is quite incredible.
Yeah.
Okay, R&D.
And then we'll move on to R&D. So with R&D, a lot of people would have already heard about this. You know, these conversations have been happening for the last 12 to 18 months. And what the Chancellor just announced was just affirmation and confirmation that actually the changes are going to happen from April onwards. And it's mainly to tackle fraud and abuse into the system. People, you know, businesses that have been doing R&D claims for years will already hear of this pay-as-you-earn cap that was there historically, got removed, and now it's been put back in. And what it effectively means is it's been limited to the amount of pay-as-you-earn that you pay. So if a business has £100,000 a year pay-as-you-earn a NIC bill, then the amount of cash that you can receive back as a tax credit will be 3 times that bill plus £20,000. So a company earning with £100,000 bill a year, they'll be able to get a cash tax credit up to £320,000.
So those businesses that are going to be largely affected by that limit, those where maybe they don't have a large wage roll, so they might outsource a lot of what they do, and they might be restricted by this limit. But in usual circumstances, you would expect for a digital agency, specifically, if you've got a big R&D claim, it's probably because you've got a big workforce and a big PAYE bill. So you should be okay. But you know, if you're offshoring, outsourcing, you might be affected by this limit.
Yeah, exactly.
And you said that recently you've started to see more letters come through from HMRC about investigations into R&D claims as well.
Yeah, absolutely. So plenty of MAP clients I've seen got these letters now. So they're general notices from the revenue, but as part of their trying to deter abuse, they have just reiterated, you know, they will start be looking into this more closely and just reiterating, you know, what the R&D is there for, why it should be used and why it shouldn't be abused. So,
yes. But it's also not to be fearful if you've had one of these letters. It's not targeted at you. It's been sent out to anyone who's made an R&D claim, but it's a general thrust by HMRC to start clamping down for those that have been abusive. So shouldn't be anything to worry about if you've used a reputable R&D provider.
Exactly, yeah.
Yeah. And then final one.
Final one was just a little slight change to VAT. Normally VAT registration thresholds and deed registration, you know, go up and down every year. But what the Chancellor said, it'll stay at the current levels for at least another couple of years. So VAT threshold 85,000, deregistration 83, and there's not really much else there.
Great, thanks, Apacina. And then I just wanted to take the last slide on business grants and borrowing. So I think most people by now, we've certainly shouted about it quite loud, are aware that there's been something called a bounce back loan for up to £50,000 worth of loans and CBILS from £50,000 upwards. These were on incredibly favourable terms, and most businesses should be seriously considering applying for either a bounce back if you only need a small amount of money, or a small business, or a CBILS if you can. They were personal guarantee free up to 250,000 as well. No repayments, no interest, no arrangement fees for the first 12 months. Just incredible, and I don't think we'll ever see anything like it again. So if you've not got your application in, you have to really, really quick, because 31st of March is the deadline, and there's a lot of work that is required to process an application as well. Beyond that point, there is a new scheme. It's called the Recovery Loan Scheme. Nowhere near as beneficial. So the government are still guaranteeing the lender up to 80% of that loan, but the lender is no longer going to get paid their arrangement fees and the interest in the first 12 months like CBILS and Bounce Back did. And you're also not going to get the mandatory 12 months of repayment holiday that existed under CBILS and Bounce Back. Now, no lender is doing this yet because it's not available until April. So we don't know whether lenders will maybe choose to allow repayment holidays, but that will be optional. It's not going to be mandatory on them from the government anymore. The Restart grants, from what we've seen, these were something that weren't administered as well, I don't think, last time by the government. As good as the CBILS and the Bounce Back was, these discretionary grants just seem to appear randomly on local authority websites at different times with different eligibility criteria. From everything that we've read, we won't know until 1st of April when they go live, it seems to be aimed at retail and hospitality and businesses that specifically have had to close, not work from home on your laptop, but actually close the doors and not be able to open as a business. These grants are designed to help through these, what's hopefully only going to be a few more months, where these businesses still can't open the door. So don't think it's going to be relevant for digital agencies, but keep an eye on the local authority websites, and we'll be doing the same for our clients and sending correspondence out accordingly. The additional business support on the right hand side here, I think, is very encouraging. I've read into the detail on this, and the leadership and management program is a 12-week program that is going to be run for directors, senior leaders and managers of businesses. It's a £7,500 intensive leadership and management program, but you'll pay just £750 of that £7,500. So a great way to start to develop and mature the senior managers within your business. Help to Grow Digital is designed to help with, which I think could be particularly interesting for agencies. It's designed to help with systems that help with productivities. So I think it's going to be about CRMs, e-commerce platforms, things to do with managing your accounts and your finances digitally. And the government are actually offering 50% of £10,000 worth of software cost effectively. So they would pay 5,000 of your £10,000 of costs. You can actually register interest in that now. I think it's going to go live in about June, but we'll share the website for going and registering your interest so that you're in the system, and then they'll be in touch with you so that you don't miss your opportunity there. And then the final thing, probably slightly less positive, is unsurprisingly, HMRC are now preparing for a clampdown on any fraud that has taken place during the COVID period. Now, you might look at this and think, well, we know that we've done everything properly. We've used our accountants and we've done exactly what we've been told. From an HMRC perspective, they don't know that until they investigate. So they are going to be really stepping up. They put £100 million into a task force to start to investigate businesses from a R&D, furlough, CBILS, VAT perspective, to make sure that businesses have been doing what they're supposed to have done. So these investigations are going to start to ramp up. And Rachel, I think you said you've already started to see instances of this in our client base.
Yeah, we have. I mean, it is still early days, but from what we've seen, they're expecting a pretty tight turnaround from people to get information across, where usually if you get a VAT visit, there's usually a couple of months to start getting the information. They're like hoping for 10-day turnaround to get a lot of information. If you've got a lot of employees and you've had a big furlough claim, there can be a lot of data to get together. So it is just worth bearing in mind to make sure everything is easily accessible.
Yeah. So if you're a client of MAP, we have a very low cost insurance policy that means that we can cover any investigation so that you and your business are not disrupted and anxious during that period. So just get in touch if that's something that you'd like to discuss. I think that is about that. So I hope that's been useful, everybody. We tried to keep it jargon free and relevant to you and your business. Thank you, Rachel, and thank you, Absina, for taking the time to share your thoughts. If you want to vote for who was best dressed today, that's absolutely fine. We'll look forward to seeing you all soon.
Thanks. Bye.